And the markets go boom with the Dow up over 410 points today. This is Mark the Meerkat in for D7 with the broad market review for the 12th of February 2018. Let's get right to it. Let's take a look here at the numbers. The S&P up plus 1.4%. The Dow was up 1.7%. We have the QQQ was up 1.7%, and then the small cap Russell up 0.95. And look at Bank. Bank was up almost 2%, 1.9%. Can't go anywhere without Bank. Now that is quite the recovery. And even the sector of the XLF here was also up 1.4%. But look at the VIX, dropped 11%, down to 25 after hanging around 30 most of the day. And then we had the dollar was also down slightly. That does support our big boost today. And oil, well, it was trading above $60 for a little while on the WTI, but then it did settle just below 60, but was up 0.25 today for the day. Gold and silver up slightly, and then no trend trade today for the Grok grads. Hey, let's take a look here at Bitcoin. Bitcoin up 9.3% on the BTC USD, and then we look at the GBTC, and it was up 3.7%. Now let's take part of this big move here were the tech stocks, the large, super large tech stocks. Let's take a look at the FANGs, right? Facebook, it did not move that much today, plus 0.17. But look at Apple, up 4% today, 4%. That has a huge impact on the NASDAQ, on the S&P 500, and on the Dow indexes. It's the largest cap stock out there. When it moves 4%, it moves the markets, doesn't it? Amazon up 3.4%. Then we have Netflix up 3.4%. And then we had Google. It didn't play either, plus 0.79%. But boy, 3 out of the 5 Fang stocks there really took off and really impacted everything there. So let's go ahead and take a look here at the charts. Look at the S&P 500, looking at the SPY, the ETF on the S&P, and where are we at here? So we know the last day of January here, we started to fall, and then and a big bounce off of that 200 moving average here on Friday. Fell, came up, and like this. So this is the first 2-day rally we have had since since February, that we've had 2 up days in a row. And it was a huge up. From down here to up there is huge. I mean, 410 points in the Dow today. That's big. And then, the big up on Friday as well. So let's take a look here a little closer. And if you look, where was the high of day here? Right on there? That is right at the close of the last day of the year. So we wiped out all of our gains from January, and that bounced up today. And where did it stop? Right there. Isn't that interesting? We are still below the 50 moving average, and we're still below the 20 moving average. Now, D7 in the weekend video had talked about the Fibonacci's and the fact that we kind of expected what may happen was for it to retrace up here, but that 50% retracement, or that 61.8 might be a factor. Let me put that on here and see where we're at. So there we just pulled the Fibonacci here, and now let's see, right now we came up here. Right here is the 50%, but we didn't quite get to that, and the 50% retracement is still below the 50 moving average, folks. So we have a lot of resistance to get through here before we get back up for the possibility of going higher. And then again, the 61.8 is up here. So those are 2 critical levels to be watching for. Again, we could not cross where the close was from the end of last year, and we still have these other 2 to get through before we end the 50 moving average, to get above those before we might go higher. What else could happen? It could hit this area and start to roll back down. We did have our 10% correction area, but are we finished there, or are we going to stay down here for a little while? We don't know. Okay, let's take a look here at the Dow on the daily. And it too came right back up here, right to that closing line from the end of last year, and again below the 50 and below the 20 moving averages. The NASDAQ was a little bit different situation, and that when it fell right to the closing area, and it did pierce the 100, but it stayed above it on Friday, and now it's starting to move up again. But look at this; it's not able to get above that 50 moving average. And then we got the small cap Russell here. It has been bouncing off the 200 moving average here over the last week, and even today it fell all the way down, tagged that 200 moving average again, and then came back up. Not as much as the other markets. It was a little bit lagging today, but it is well below the levels that it was at the end of 2017. And then bank, it has not been falling as much because it is just playing around the 100 moving average, not the 200, and it is above. It is staying just right here above the area in which it closed at the end of last year. And so we still get fighting that 50 moving average. All right, let's talk about the VIX. Oh my goodness gracious, the VIX. I mean, just to put it in perspective, we've been down here below 10 record lows from the time it was invented, the VIX index was. And look at last week. We went up here, we hit 50 last week, 50, and then pulled back here around. Well, even today it was up here around 30 and then pulled back down 11% for the day. So I think the fear is starting to come out very gently. Again, above 20 is a danger area. Above 30 it is outrageously screaming, but it's likely to snap back from that relatively quickly, right? Let's take a look here at the weekly chart on the VIX, and you'll see what I mean here. Now let's go back here several years, and look at that. We haven't seen 50 since back here in when was this? What week? Since 2015 is the last time we saw anything over 40. So we were at 50 last week. So yeah, that's pretty outrageous. But the statistics are that when you have a big spike like that once it settles down, you would tend to have a 22% gain on average after a big spike like that over the next couple of months. So, the odds are we could be going higher, but only after this correction is in. So let's look at a couple of those FANG stocks. Let's first of all look at Apple. Here's Apple on the daily chart, and look at that. It's been hanging around this 160. This goes way back here, a line of support and resistance. It's a key level on Apple going back over a year. And we were at the highs here at 180. It's been dropping, hanging down below that area. Even on Friday back here, it almost tagged the 150. Came all the way back up, and now we're up 4% today. Above the 200 moving average and this 160's line of support and resistance, and the 50 and the 20 are still above it though, so we still have some areas of possible resistance here to get through. Amazon, wow, here's a nice run here. Look at this run here, and it's pulled back, but where's it pulled back to? Compared to the rest of the markets, it's only pulled back to its 20 moving average. Look at that. Not the 50, it's still above the 20 here. So this is a much healthier. What are these yellow areas down here? Those are two entries that I've had in my long-term account. So just disclosing, I'm in that one. I'm also in Apple too from multiple years ago. So this is very, very strong. Then we have, now look at Netflix. Now watch this change over. The charts almost look identical. Look at that. There's run up here, and now it's pulled back to its 20 moving average, just like Amazon. So Amazon and Netflix are two of the strongest of the FANG stocks right now. They pull back, but they only pull back to their 20 moving averages, folks. Not a major correction for those versus the other ones. And look at it, look at the moving averages, nice and fanned out like that. Shows a lot of health there. Well, that's it. Just remember here at Grok Trade that we trade what we see, not what we think or feel. Trade well.